Well, although I am not someone who works in the financial world, I like to think I understand most things just enough. But for some reason, there is one area that nearly everyone I talk with doesn't quite get, and it turns out we're not alone. So we have Corey Sickles with Safe Harbor Retirement joining me today to explain annuities. It's like this unicorn in the world. So first of all, welcome back, Corey.
Glad to be here, Robin.
All right, so let's start off with why. Why is it that this is kind of that hard area for a lot of people to grasp?
Well, I think when you go back and look at it, when they sit down with their probably advisor at the very beginning of it, they're putting money into a product they really don't understand.
Okay.
And I don't think there's enough advisors out there that truly, show them, what is a fixed indexed annuity or a variable annuity, but they don't understand maybe even the surrender fees that kind of even go with that. So I think a lot of times the misperception of people not wanting to put money into an annuity is that I don't think they've been really led down a path to make sure they're educated about exactly how this is going to benefit them.
And you say a lot of times even like the broker may be, trying to sell a product or something, so they push them towards that without then furthering it as to what even is an annuity. You mentioned 5 terms in that sentence that, there's a lot to an annuity that we have to understand,
yes.
Right?
Yeah, they are complex. But at the end of the day, the way I really try to explain it to my clients more than anything else is think of it as a pension. We all understand what a pension is.
Right.
You work, and at some point in time you retire, and when you retire, then you start receiving that monthly payment. And that's really exactly what annuity can do for you, is you put money into it, and at some point in time you're going to be able to take money out and start having guaranteed income for your lifetime.
Okay, so let's talk about then how you pay into it then. Is it a premium? Is it something like a life insurance policy? How do you liken kind of the investment into an annuity? Yeah,
so first of all, an annuity is backed by an insurance company. So you have a couple different options. You can do a lump sum, which means, maybe it's your 401k or you're putting a portion of your money in there in one big lump payment.
Okay.
Or you can actually pay as you go. It's kind of up to you where you are and what are you trying to really accomplish. There's a lot of questions that I would, work with, someone coming in to find out what's the best for them. But that's really I guess the easy part is you put money into it, and at some point in time what you're doing is putting the liability onto the insurance company, and at some point they're going to guarantee you a payment for you, and if you're married, even for your spouse, that's going to be guaranteed for the rest of your lifetime.
And so when does it start to pay you, I guess? Where is that determined? Because we know when we retire, right? I mean, kind of pensions and all that stuff kick off. You've got all the required ages you have to hit things. Is the same to be said for an annuity?
Well, the easiest way to answer that is, when a client comes in and sits down with me, we put together a financial plan. And part of that plan, if we're going to put money into an annuity, is to determine when we're going to actually trigger that, just like you talked about for lifetime income.
Okay.
In most cases, the way I look at it is when you retire, your paycheck ends. So a lot of times what you need to do is you need to fill that income gap. And an income gap that can be filled with that would be Social Security, for example, and it also could be an annuity at that point in time as well. Everyone's situation is different. It could be turned on immediately when you retire, or it could be a few years after.
And you kind of alluded to this part, is that, and this isn't with every product either, that you can then pass this annuity to a spouse, to a beneficiary, right? I mean, that's kind of part of an annuity.
I think one of the big misconceptions are, and that's the way the annuities used to work, is if something happened to me, then the insurance money or the insurance company kept the money.
Right.
And that's not the way it works anymore. If you have an income rider, which all of our clients do, when you pass away, what happens is, your spouse could also receive it as well, so you have a joint payment. But once both of you pass away, whatever money's left ends up going to your beneficiaries.
And this is tax deferred as well. That's always important to mention,
yes,
right?
Yes, it is. It's a big thing. It's tax deferred, and it doesn't matter whether it's like IRA money or 401k money, or even if it's money that you have sitting in your bank account where you might be paying an interest, or dividends, interest every year. If you put this money into an annuity, you're going to delay it until you actually start taking withdrawals out of that policy.
All right, Corey, a couple of tools for people to know about. You created a website entirely about annuities because of this very reason. So we're going to put that up on screen. It's a specific place you can go, annuityincomeforyou.com. And then if somebody needs to learn more, if they want to invest in this, complimentary, I mean, no risk to kind of come sit down with you.
That's correct. I think the website we have there that's on the screen, it's a great way to be able to understand what an annuity is. You come in, meet with me. All meetings are complimentary, and then we'll put together really a plan to find the right type of annuity for you.
All right, Corey, great advice. Thanks for being here.
Thank you.